Well, again,
Hello.
just
Hey,
give me a quick minute to get organized here.
And
Okay,
so right
so
now
this,
you're just understanding how we're doing things, but you'll give us like a deadline of when you need a template to like completed to upload, right?
right, right,
Cool.
absolutely, absolutely.
Perfect.
Yeah, that's kind of what the regular Tuesday meetings are. Is for us to kind of go, what are we doing this week? When's the deadline? You know, I,
Perfect.
I
I
just
love a
I
good
brought up
deadline.
Yeah, I brought up those other things because really to configure gravity, um, there's nothing to do until the chart um, or the entities are configured. Okay. Okay. So we work off the schedule for topics. Okay. So this session is about using the general ledger um, from the perspective what type of transactions you do. Um, in Gravity, we have recurring transactions, automatically reallocating transactions, reversing entries, intercompany entries. Um, we have this also. We will have a discussion on budgets and what you do with them, and then what do you do at month end, quarter end, and year end? Okay, if anything. Um, so, okay, so so from a perspective of the types of transactions that you do, everybody does a standard journal entry whenever you need it, right? Of course, journal entries are automatically created by AP, by AR, by certain other modules, and they land in the general ledger, and they're there for reporting purposes. Then we go to the general ledger and we make a journal entry to reclassify something to um, you know, because that's the only place we can enter it. Those types of things. So, um, tell me if what I'm looking for are those anomalies, right? Is there anything in a standard journal entry that you do on a monthly basis? Um, you enter payroll by journal entry, or does your payroll feed automatically from what your payroll is? Paycom, is it?
correct.
Okay.
They give me a report and I adjust the report, um, and then manually make that entry in QuickBooks because it doesn't work well with Excel, but I'm assuming with Gravity it'll be a lot easier.
Yeah, yeah. So yeah, we do have a session on how to map your imports, those types of things. So once you've got it in in Gravity, um, almost everything is done by CSV, which shouldn't be a problem. That's just a save
No.
as, right? Um, and but the exception to that is when you export something from Gravity, modify it, and import it right back in. Those are exported as Excel files and stay that way. But we'll get there. Um, so okay. So standard journal entry. You go in, you enter your debits, your credits, all normal there. Um, and as we move along things, you'll have questions about these things. The types of journal entries that we can do recurring journal entries. Do you do anything in QuickBooks that's recurring? A depreciation entry. So this is an automatically recurring journal entry. So I tell it when I enter the first time, I say, I have to do this every month or every week and set up a schedule for it. Do you do anything like that now?
There are some consistent journal entries. Quick question. Um, when you say recurring journal entries, I remember in like there was this app called If This Then That. I don't know if you've ever used it or not, but is there a way to set up so, for example, if something gets put into prepaid expenses, it will automatically be allocated every single month over the next, you choose however long time period it does. Is that the type of entries you're talking about? Or only like, hey, like we have a depreciation entry for or a prepaid entry for the land that we purchased and the mortgage on it gets automatically paid every single month and it always gets paid on the same day type of thing.
Right. No, it's the second. It's the second,
Okay.
not the Gravity does have a module for called uh, revenue recognition, which also does expenses. So if you were to bill, like people who bill subscriptions and they bill it at 12 months, but they want to allocate that over each of the 12 months, but you've billed the whole thing in month one, there's a module for that, and it works with expenses too. So if it's a prepaid expense that you paid in January and you want it to actually move in subsequent months, then that's a module in Gravity. Which
Yeah, we would definitely utilize that.
For sure.
you would or would not?
We would.
Would. Okay. Okay. Do you know if that was part of your? Was it part of your implementation?
I would assume so because we talked about having prepaid that we amortize monthly.
Okay.
So I would assume that was discussed.
I will make sure I ask that question. Okay. Yeah. Sometimes I'm the guy doing it, and I don't know how many users and how many modules you have. So
Sure.
we'll get there though. So okay. So the concept of recurring native to the general ledger is more the depreciation, right? Where I have to book this same journal entry every month. And even if the numbers change a little bit, it recurs as unposted, and so that you could change numbers if you wanted. Okay. Some people have them recur with zeros, and it's just more of a reminder to do this, because even on a mortgage entry, right, the interest and principal typically change. So you can have them recur as $0 entries, and you actually enter them. It's more of a reminder to do this. Okay. Allocation journal entries say that I'm going to post $10,000 to my telephone expense, and I want the system to reallocate that by percentage to departments, dimensions, other entities. Okay, so you could say, look, we pay the the Verizon bill comes in, and I pay $5,000. I want that 25% in this company, 25% in that company, 25% in another company, okay, automatically. Or you could say operations gets 10%, IT gets 10%, as a dimension. Okay, those things can happen automatically in Gravity if you so choose. Okay, so they can go across GL accounts or go across entities and GL accounts. So we'll get to intercompany, just straight regular intercompany where you're sharing an expense. This is kind of a unique offset of intercompany journal entries. It can be. It doesn't have to go across entities. It can be staying in the same entity, but you could be allocating this expense across IT, operations, or every one of your projects. If there's some overhead that gets put to projects, you could say that this gets allocated to projects. Okay. Do we do anything like that now? Is there something like that in QuickBooks?
No, it's not set up standard like that. We're doing that manually.
Correct.
Okay.
But so that's something that I think we would probably use if it's a function of Gravity. I think we would definitely start to use that because there's, specifically I'm thinking power costs. We have one contract with a power supplier, but they supply power across multiple locations. So I think that would be really helpful. Right now, we're just like manually chunking it out. So
right now in Gravity, it has to be by percentage. Okay. So to be completely automatic, it has to be, 10% here, 5% there, 8% there. In the future, which I don't think is quite as far out as the first example I did, is we're going to have statistical accounts where we can say head count or number of projects. If this power supplier is for 12 of my projects, then I want it supplied. I want it distributed equally among these 12. Okay. So right now you have to allocate by percentage. In the future, you'll be able to allocate by a statistical account that you'll just store head. Yeah, you'll store head count. You'll store locations, sites in one place, and then the function of reallocating will be by those statistics as opposed to just a straight 10%. Okay. Reversing entries, accrual, things like that. In Gravity, we mark a journal entry as recurring, as reversing, and then it'll ask you for what date to reverse itself on. Okay. Do you do anything like that now?
Yeah, the prepaids and stuff like that.
Okay. All right.
Yeah, and we'll do it for accruals too, obviously, right?
Yeah. That's the
biggest one.
obvious. That's the biggest one, right? Is your accruals and things like that. Okay. Now, go ahead.
No, sorry, I was just hiccuping.
Okay. All right.
Sorry, I apologize.
Okay. So intercompany journal entries. I know in QuickBooks. Do you have? They've just recently released something that allows you to do intercompany. Do you use that?
No, not yet. No, we are still doing all of our intercompany manual and just tracking it in an Excel spreadsheet. So we figured that we weren't going to mess with that new rollout since we were switching to Gravity.
Right. And no. I came from a QuickBooks place, and we looked at it. We've been looking at it, and it's still a whole lot of setup, and it still doesn't quite work yet. So it's going to get there. Like in QuickBooks,
I feel like QuickBooks has a history of doing that. They'll like roll out a feature before it's like truly vetted.
Oh, absolutely, yeah. Because it's one of the main. It's one of the main reasons people leave QuickBooks, right? And so that they're kind of desperate on that one. So inter-entity, intercompany journal entries. A journal entry can cross entities. Okay, I'm just kind of explaining what Gravity does. So if you think about a journal entry, it has to balance, right? It has debits have to equal credits. Well, when you use intercompany, now they don't balance, right, within an entity. So there is a setup in Gravity that describes the relationship between two entities, right? So and what we're going to define in that relationship is what is the due to and what is the due from account. Okay. So when you say credit cash for $1,000 and debit rent in company 1 for $500 and debit rent in company 2 for $500, right? Now what Gravity does is takes that, archives that journal entry, and creates 2 new journal entries. And those 2 new journal entries in entity 1 will have the cash and the $500 expense and a $500 due from entity 2. In entity 2, we have the rent expense and a due to company 1. Okay. Now I'm going fast, but there's training on all of this, so But what we require then is that we set up those relationships so that Gravity knows what is the due to account and what is the due from account. So you have those in each of your QuickBooks, so they need to be in this chart of accounts that you create for Gravity, right? So, and I don't know your entities yet, so I'll just say company 1. So in company 1, you may have a due to company 2 and a due from company 2. And in company 1, you may have a due to company 3 and a due from company 3. They can be one account. Okay, so whether you prefer to have your due to and due from as separate accounts, or you have an account called due to from.
Okay? Yeah, what do you typically see as best practice for that? Because since we were doing it so manually in QuickBooks, we just had 2 separate accounts, a liability and an asset on the balance sheet for each company. Yeah. So that we could be really clear about tracking them. But ultimately, that's just a really big balance sheet gross up. And so I'm wondering what you see typically as best practice. Do you see most people lumping them into one due from account and just keeping it, whether it's a contra asset or not?
Yep. Is that what I see most people do it as one account in a due to from.
Okay. Perfect. And that's probably what we'll do.
Yeah. Because obviously it self-eliminates, right? Within the entity. And otherwise, you're kind of looking at 2 accounts to go, okay, I got an asset here of 3,000 and a liability of 3,001, and I got to do something here. Here, you end up with a debit or credit, right? And so yeah, easier to manage, easier to maintain, and but if it's going to be a problematic kind of relationship where there's a ton of transactions, that's when I see people separate them out because they're continually auditing that account, right? In most cases, it's
So
not.
to Casey's question as well, and now is there going to be one due to for every single company, or could we have one due to due from for each pair of companies? Would that
I
make
think
more
we'd want
sense?
it. I think we'd want it split out. So, like on the company one's balance sheet, we would want a due to due from company two and a due to due from company three.
Yeah,
Right.
that's what I'm
Yeah.
thinking too. I just
Yeah.
wanted to make
Yeah.
sure that that was my
Yeah.
understanding of it. I just
And
wanted
then
We
to
just
double.
company.
wouldn't have we wouldn't have two asset lines and two liability lines on company one, right? Instead of having a due to company two and a due to company three, and then a due from company two and a due from company three, those would get lumped together, but still separated by company.
Exactly. No, I agree. That's yeah. You
Cool.
should have, and then income, and then there needs to be, um, now the question is, what do I have in company two? Right? Is it the same account number? It can be the
That's
same
what we were
account number.
doing. Yeah.
Okay, it's the same account number for the relationship back to company one.
Yeah, that makes sense. So
Yeah.
if we're using like say 1,000 or 10500, then on company two it would also be 1500.
Correct. Right.
Right? Because
Right.
then when
And
they
that
consolidate up, right, theoretically they would all net up against each other.
they would, and that's the yes, and so, but then in the company one and company three would use the unique account, but be the same in each one and three.
Right. Yeah,
Yeah,
that
so it
makes
would be
sense to
like
Yeah.
me.
10501 for company 2 and 3,
Right.
and 10500 for company 1 and company 2.
So what needs to be thought through then is which it's typically one entity, major entity that pays for the expense on behalf of the others. But there can also be, is company two going to pay a bill for company five? You know, is company five going to pay a bill for company three? So that we try to minimize the number of accounts, but there's still a uniqueness between the relationship between two entities, right? So kind of map those out maybe in their own spreadsheet, because there is an import for these relationships too. So there's a relationship name that is called company one, company three. These are unidirectional, meaning if I have company one paying on behalf of company two, that's one relationship. If I have company two paying on behalf of company one, that's a different relationship that uses the same account number. Okay, so one paying on behalf of two paying on behalf of one might use the same account numbers, but in reverse order, right? The due to and due froms. So
Yep, that makes sense. And we're going to have them going both ways. Like,
okay.
Yeah, it's kind of going to be all over the board. Like sometimes company three will pay, sometimes company one will pay on
Yep.
different types of expenses.
Yep.
Or sometimes there's revenue received in because the revenue is like Bitcoin mined. It's not necessarily always to one company or the other. So there'll also be some revenue too. So
Sure. Okay.
and especially like customer payments. Sometimes the customer will pay, we'll have a contract with them on SHS and a contract with them on SRS, so entity one and entity two, and they'll just pay the full amount into entity one, and so we have to allocate that due to company two.
So if you had done each entity had done an AR invoice to that customer, right? And now the customer has those two invoices. They pay one. They send in one check to one entity. Gravity can handle that. So
Perfect.
Great. It'll say, is this cash receipt for more than one entity? Check the box yes. When you go to apply the payment to the invoices, it brings up the invoices from all entities.
Oh, Chris, this is going to make your life so much
Perfect.
easier.
Just
Yeah.
gets rid of the do to do form. It makes it more simple.
Yeah,
Yeah.
this is going to be great.
The
No,
whole
it,
point of
well,
setting
it
up
it
was
it
Gosh,
still
go.
does a do to from. You just don't have to do it. But gravity will say, "Oh, we got cast into company one that was for company two," and gravity will create that do to from. Okay,
Oh,
because
that's a
yeah,
big. This is the whole reason we're switching to gravity.
that's
That
that's what we
one
see.
thing.
Let's make sure that in team that we have the shared data migration multi-entity due to from. Okay, that's the template for importing these.
Perfect.
And what you're gonna let's make sure it's the correct one because I've seen sometimes they're not. Okay, so here you got a relationship, and that's just a name. Entity one, arrow entity two. So now we've got what entity, and these have to be exact. What is the due from account, the due to account, and the destination entity, entity two, what is the due from and the due to account. Now you just build these out, okay? And this will give you the import that needs to be done. Okay. So again, now if entity two does pay on behalf of entity one, it's a separate relationship. Okay. Because the originating entity is now entity two. So you may have entity two, entity one. Because in some stage products that people are coming from, you can have it's multi-directional, but in gravity it's not. Okay. So if entity two does pay on behalf of one, that's two different relationships. Okay. That's the only thing that's unique there. Okay. So that's out there. That's out there too. That one gets a little tedious to build because there's a lot of different. But
and I think
we'll have training on that one, though, correct?
Yeah, we will.
Perfect.
But let's make sure that all accounts. Say again, Chris.
No, I was going to say, I think for ease of use, and let me know if you disagree, Casey, I'm just going to create a relationship going from to and from each company because I can see scenarios where that's at least used on a small basis going forward. And I would rather have everything built out to just have that availability there than.
Absolutely.
Yeah. So
then get stuck and going, that relationship doesn't exist. Now you got to stop
Agreed.
what you're doing. Yeah. And a lot of times
100%.
you're doing an import, right? And that import gets interrupted and then it gets crazy. So build them all out, every possible. If you add a new entity, keep that in your list of to-dos when you add a new entity, get all the relationships built out and imported in. Make your life easier when you go to do a transaction, right? Okay. All right. Okay. So now that same relationship I mentioned happens in AR on cash receipts. The one thing you cannot do is you cannot invoice a customer on behalf of two entities.
Yeah, that makes sense. We would want to keep that revenue separate anyway. And that's how we do it in QuickBooks. So that's not a huge, that's a big deal for us. Our contracts are typically split out anyways. So it's a contract between entity one and they have a separate contract with entity two, I believe. Right, Chris?
Correct.
Yeah. Okay. So that's not an issue.
No,
but thank you for pointing that out.
Yeah, on AR side, the issue is when I received, they paid one check for 3 different invoices from 3 different entities. So you can do that. Okay. AP happens exactly the same. And on an AP voucher, so terminology, Gravity calls them vouchers. They are a bill from a vendor. QuickBooks calls them bills, invoice, whatever they are. They're vouchers in Gravity, okay? On a voucher in Gravity, you can split it out between entities, between dimensions. Okay?
Oh, that's cool. Okay.
Yeah. So right, and then the obviously that happens at the GL landing place, not in AP. The AP is always going to stay. The payable is always stays in one entity. Okay?
Right. It would just be if cash was paid for multiple invoices.
Exactly.
Got it.
Okay.
Okay.
All right.
So if we did receive, like, say we did receive a power invoice, like a voucher from a vendor for power costs, and it was across multiple entities, it would still be on us to go out and create 2 separate payables.
You wanted them paid out of separate entities, yes.
If we wanted the expense to show up on separate entities.
No. Then you can enter it in one entity and expense it. You can expense it across entities. You just can't push you can't push the payable out to another entity.
Right. That makes sense.
Yeah, the payable itself, and then later the cash.
Right.
Comes out of one entity, and the due to froms are created. But the expense side of it can be done on the voucher.
Perfect. Okay, cool.
Good. All right. Okay. Now, yesterday in the meeting, Brian said you guys do budgeting. Is that correct?
We currently do not do budgeting, but we will be doing budgeting.
Okay. Okay. So budgeting is not part of QuickBooks now.
Correct.
Okay, and you will. Now, so Gravity is able to handle as many budgets as you want per entity. You can budget to the dimension level if you care to. Okay, so by department or location, if you did budget, you can, and then those budgets are able to be used on financial reports, right? Budget versus actual. So anything you're anticipating is different. I mean, that's pretty standard stuff. You can have budget, and then budget. Maybe some people adjust their budgets mid-year, so you don't have to change that original budget. You can create a second budget that is a mid-year adjustment. In October, you could be working on next year's budget.
Does Gravity recognize that and show or have the ability to show hey, this was the original, this was the second, this was the third, this was the fourth, and then this is the actual, and compare all lines together?
Well, the only relationship they have to each other is in the name of the budget. Okay, and then you could use the original budget versus the revised budget on a financial if you wanted to, but really they are separate kind of entities, if you will. They're separate budgets, and they don't relate to each other except by name.
Okay, so anything that does get brought in would have to be customized to be pulled in, correct?
Well, if you exist an existing budget, it overwrites. So I have no knowledge now of what the original number was. If you create a second budget that is an adjustment to the first, now at least I have the visibility of how a budget changed. But
Correct.
I do not.
I don't think I'm asking the right thing.
Okay.
So what I'm saying is, for example, we create a budget in December, and then March, April comes and we need to revise it, or June comes and we need to revise it. Can we copy that budget as budget 1 to make it budget 2, but still have the base numbers in there that was original, and then from there pull in the budget to actual, let's say December 31st, to, hey, what was our original budget 1? Then what was our updated budget halfway through the year, budget 2, which was a copy of budget 1, and then have that as a compared to the actuals at the end of the year.
Yeah. So number 1, you can copy a budget, and then give it a new name. Okay. You also have the ability to do some functionality in that copy. Like if you're revising, you typically bring the numbers in as they exist now and then revise as needed, right? Maybe when you're doing next year's budget, you may want to copy that, but increase everything by 10%. So you can do that. So there's some functionality in.
Ooh, that's nice and easy.
Yeah, and copy it to next year. But what you described there, Chris, was yes, you can copy budget one to budget two, and they're exactly the same. Now you revise budget two, right? And you
Yep.
name them appropriately. Then
Perfect.
either or both can be used on a financial statement.
And
Right?
now, next question after that would be, what level of integration is there with OpenAI, ChatGPT, Perplexity, Claude in the analysis and in the forecasting capabilities compared to with that?
Well, by right now, none. It's being worked on, and it's 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 going to be short. That's short term. We're going to start to see the AI capabilities. Um, I will ask specifically, just so you know, on Tuesdays we meet with John Silvani at Gravity and the dev team to get our technical questions answered, as well as we see the roadmap as it changes too.
Yeah.
So that's a biggie that we learned about 2 weeks ago, but I didn't ask the question specifically around budgeting, and I will.
Well, so then my next question will be, and this is just kind of just in general, and sorry for going down this tangent. This is just important to us because of we are trying to go more towards this with the company wide. Is there just a regular, because I know it's based on Microsoft, so if there's an AI that has like, for example, we're trying to bring some of the AI stuff in-house and build our own models and stuff based on what is in our financial systems and whatnot. So if we have the capability to create like a Claude account and whatnot, would that have a direct connection with, for example, Excel to be pulled into Gravity or full pulled from Gravity? Is that like the workaround right now, or are you talking about will be a direct connection?
No, well, what Gravity's working on is direct.
Okay.
But right now it is a relationship between Excel and AI and Excel and Gravity.
Okay.
So
perfect.
But yeah, and I didn't, there are a few places that it really comes into play, and budgeting forecasting is absolutely at the top of that list. Okay, so I want to find out where on the list that is, and I'll get that answer today.
I appreciate it.
Yeah, and see if we can't figure
It's
out.
not a super high priority for us because we wouldn't be doing budgeting until the end of the year, but that's great to have in the back of our minds.
Right. But it's going to matter as what's the relationship between GL accounts, the relationship between actuals and budgets, and how can that filter through to next year's budget, right? That we were off by 12% on every one of our expenses. Great. How should AI could tell me that, right? And I want to increase my budget for next year by the amount I was off this year, right? Or maybe it's a percentage of revenue, that revenue grew 12%, so expenses should be as a percentage of revenue. Yeah, there's a lot of, it's mind-boggling the things that the dev team is thinking about on this, because it's big,
For sure.
Yeah. So okay. So we'll get there, but yes. So budgeting is part of it. There, even in the budgeting tool in Gravity, you will see that it looks like Excel, and it has rows and columns that can add and subtotal and all of that, and it's very Excel-like, the budgeting in Gravity. So that in a lot of places, that platform being Microsoft really has its advantages, specifically in Excel, but also Word too. In that like your AR invoice formats, those are Word, and everybody knows how to use Word and use mail merge features to change your invoices and things like that. So you'll see that as we move along too. Okay. At month end, do you do anything? So what people typically do, they run financial statements, they make their journal entries that need to be done, and then run financial statements. Do you create a financial statement package that you deliver to certain people, or do you what's the month end like?
Yeah, so I make a package of P&L, balance sheet, and cash flow statement for right now each of the three entities, and then on a monthly basis, and then the consolidateds for all three entities.
And when
For
he does
those three.
consolidated, he's also doing trailing. He's doing consolidated year to
Oh,
dates,
yes.
consolidated monthlies, and consolidated trailing 12 months.
Yes, sorry, thank you for reminding me of that, Casey.
Yeah. Yeah. So you'll be able to build all of those. We call it ADFS, Advanced Financial
Yep.
Statement. Yeah, the ADFS tool um, is 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 something that when we get to the training, you'll see it looks a little bit old. It's being revamped right now, but it works just fine, and it's rows and columns, and they can be trailing 12 months. It can be, you know, it can just be month to date actuals versus month to date budget. It's whatever you want it to be. So a lot of the customers have 10, 15, 20 different financials. And so you can have as many as you want. You can copy them. So because what we typically do for you is we build out a balance sheet and an income statement. Okay. Because it's tedious to bring all the rows in. So you can learn how to import all of the rows for balance sheet, import the rows. And once it's done once, you can then copy that to the next iteration. And so if you have a generic income statement and you want to create one that is budget versus actual, you simply copy and rename it. And now you've got a second one, right?
Now,
and you add a column and you add columns to that second one, right? Or change
quick
the columns.
question.
Mm-hmm.
On that specifically with the entities with the P&Ls and stuff that you just reminded me of something. Are some of the entities will not be already aren't 100% owned by the same umbrella company? So is there a way to add a percentage of how much revenue, income, expenses are being pulled in per the ownership? So for example, company 1 is the umbrella company that owns company 2 and 3. Company 2 is owned by you and Casey. Company 3 is owned by you, Casey, and me. So and I own 50% of company 3. So is there a way to have built into the P&Ls that company 2, when you do the consolidations for company 1, pulls in 100% of company 2 and then only 50% of company 3?
I think yes, in that we can do calculations. We got to play with this one because you could do a column. So let's say we had company 1, company 2, and company 3 as columns in this P&L, and then company 4, column 4 is 50% of column 3. Okay, and we can hide that. You can hide these columns for a report. But then when you consolidate, we're going to consolidate column 1 plus column 4, which is 50% of column 2.
Okay.
Sorry, I'm on a whiteboard in my brain.
No, I see what you're saying, and
yeah, sometimes that whiteboard works, sometimes it doesn't. So
no worries. Yeah, just because I know
but
that.
certainly we've got a training session, like a 3-hour training session, which I might sometimes we break it up into 2 sessions, but it is to once we have the chart of accounts in, that's why we have a sandbox, right? We get the chart of accounts in, and then we bring in some trial balance or some opening balance. Now you've got a sandbox, so you can start building these reports, right? And so, and even after we go live, the sandbox will still exist, and you can copy your live database back to your sandbox as many times as you want to keep sandbox up to date. Okay. Then, anytime you want to experiment, you just go to the sandbox and do it. And so that's the first thing we'll have is the sandbox. I think we can create these columns, and column 4 might be 50% of column 2, and column 5 might be 33% of column 2. Okay, And now when I create a consolidated column, I just hide all these other columns, right? And I'll say that this is the 50% spread by net P&L or whatever it's called, right? And so I think yes, but we're going to have to definitely play with that one. Okay.
Perfect. Thank you so much.
Everything we create, specifically even in this case, the ADFS financial statements, they dump to Excel in a cell by cell, not a report, but a cell by cell. The only thing you lose is the formulas that were in there. They become numbers out there. So I have seen occurrences where a company, they do something so unique that they create all the numbers in ADFS and then dump it out to Excel. Okay, and at least you've got your assembly of all the numbers in an Excel format that you can then start to do those things. But I think we'll be able to do that. Okay.
Cool.
Okay. Anything unique at quarter end?
Not right now, no. It's mostly month end and year end.
Yeah, that's the same. That's what I hear most of the time. Year end is different in that you might do 1099s as well as the financial statements.
That's
right?
pretty much the only thing at year end that happens that's not happening at month end would be 1099s.
Okay. So be prepared that you can bring in, if we convert mid-year, that you can bring in the existing 1099 balances for a vendor. Okay.
Okay, great.
We don't want to run one out of QuickBooks and one out of Gravity. Yeah.
Right.
So there'll be part of the vendor import, either with the beginning vendor or later after the fact, is to update the 1099 opening balance, if you will. Okay.
Perfect. And that's probably, I would assume that's just part of the template for the vendor vouchers, is there's a column to mark whether it's 1099.
1099 a bull, yes.
Perfect.
And then, of course, when a vendor is set up, there's a default. What 1099 is it? Miscellaneous, rent? Is
Perfect.
it whatever the categories are for 1099s?
Yeah.
Okay. Anything you can think of in general ledger? In general ledger is not where the uniqueness occurs. It occurs in the operational modules, AP and AR. That's where things are unique. In a general ledger, there's nothing you do typically in a general ledger that hasn't been done before. It's the uniqueness of a financial statement. It's the intercompany transactions being set up correctly.
Correct. Yeah, our GL stuff is pretty standard out of the box.
Okay, and it usually is. So, again, I tell people, look, we do this to gather information, to find little yellow flags where we might have to create a workaround, or in some cases a red flag that say, okay, Gravity doesn't do that. What are we going to do here? Is it a workaround? Is it a custom piece? Is it a workflow? So that Gravity is written on the Power platform from Microsoft. There's Power Automate, which is a workflow engine, right? You can make Power Automate say that, when I create a new vendor, I need to send an email to Casey. Okay, Power Automate can do almost anything. If I create a new vendor, I need it to add these default things for me. All of those things can be done, but because of the uniqueness, they're not done, right? So where we run into a red flag, say Gravity can't do that, it's almost always a Power Automate to do that, right? So keep that in mind. And by the way, I'll tell you when I hear about a red flag that I'm worried about, because if I can't make it work, then it's not going to work for you. So. But keep in mind that Power Automate can do things in and out of the system. It's how people do approval workflows. It's how you do. If you need a Gravity transaction to update your CRM, that's how you do it, right? Is Power Automate. So I'm not smart enough to do Power Automate, but there's a lot of people who are. So.
Yeah, that's exactly where I was actually going with my question. So we are building out a CRM. I'm not 100% positive we are going with the Microsoft CRM. I think we are. However, it's still in discussions. And one of the things that has been a struggle for the CFO, and I, is organizing the potential revenue in the future based on the, quality of the lead that we're putting into the CRM. Is there a way to combine, like, for example, we get a lead tomorrow, XYZ company, and Shike, one of the owners, looks at it and is like, hey, I think there's a 60% possibility that we can get $100,000 of revenue from them over the next 12 months. Would that be able to be built out and brought into the potential budget type of thing?
Absolutely. Yeah, that's exactly where we look at things like that. And it doesn't have to be the Dynamics or the Microsoft CRM. There are certain hooks that are already so this platform that Gravity's written on is the same platform as the CRM. And so there's certain hooks that are already there. For instance, if you create an order in Gravity or an invoice, it can push to that customer in CRM without a whole lot of anybody doing anything, because they're the same platform and those hooks are already there. But for those types of things, yes, Power Automate is very typically used in CRM opportunities to budget or more. Now people use a budget as a placeholder for a forecast too, right? So you can have a budget that's called forecast, and it's just a place to put something and report on it. Gravity doesn't do forecasting natively, okay? But if you need a place you say, okay, well, we've done our forecasting. How do I keep this for Excel? Well, you can put it in a budget in Gravity, transfer it to a budget if it makes sense, copy it, report on it, that type of thing. But we have customers that use, a lot of different CRM. And when you're using Power Automate, some connectors are already built, like Salesforce. There's a connector on this platform to Salesforce. Okay? Now, it may have 30 different fields that it connects. But if you need 40, great. You got to do some work on adding that to that connector. Okay. So the connectors are built for. There's one for Sage CRM. There's one for Salesforce, and you're starting to see more and more as the Monday kind of tools emerge. You're starting to see connectors for those too. So I think I tell people, look, I love CRM, and I've always been a CRM junkie, and I tell people, buy the CRM that's right for your company, not right for this platform, because you can connect it. Okay, so okay. If you think of anything else, don't hesitate to email me. I'll put a reminder to Brian to get those invites out for Teams. And if that works better for you, you can chat there too. So
perfect. And then we've got AP tomorrow. We don't have any other to-dos on our end right now. You're still collecting data, correct? I just want to make sure we're not holding anything up.
No. And then what'll happen probably in next week's meeting is probably when the to-dos start. Right.
Perfect. Okay.
And next Tuesday we have that meeting, and we'll go through. Okay. Now, the entity matrix and the chart of accounts really got to get done. Okay.
Perfect.
And so, but that'll be next Tuesday. So you'll start to see to-dos after that and deadlines. Okay.
That's great.
All righty. Again, something comes up after we hang up the phone, don't hesitate. Just let me know.
Perfect. Thanks so much, John.
You're welcome.
Thank you so much, John.
Okay. Bye now.
All right. Talk soon. Bye.